What if one bad trade suddenly wipes out all your hard-earned crypto gains that you've accumulated over months or years of careful investing? In the highly volatile world of digital assets, protecting your portfolio through smart risk management strategies is absolutely crucial for ensuring long-term success and safeguarding your financial future. This video is provided strictly for informational purposes only and should not be considered as investment advice in any form. It's important that you always conduct your own thorough research and due diligence before making any decisions in the crypto space. Risk management in crypto is all about systematically identifying, assessing, and mitigating potential losses before they occur. It acts as your primary shield against the unpredictable and often ruthless nature of cryptocurrency markets. Ever wondered why Bitcoin can plummet by 50% overnight, shocking even seasoned traders? Crypto markets are notoriously volatile, propelled by rapid shifts in investor sentiment, cutting-edge technological advancements, breaking regulatory news, and macroeconomic factors. Understanding the various types of risks is essential. Market risk arises from sharp price fluctuations, liquidity risk from challenges in buying or selling assets quickly without slippage, and security risk from threats like hacks on exchanges or wallets. Regulatory risks are equally pressing as governments worldwide wrestle with how to classify, regulate, and oversee digital assets, decisions that can profoundly affect their value and market accessibility overnight. One of the most fundamental risk management strategies is diversification. Don't put all your eggs in one digital basket, but instead spread your investments across different assets like Bitcoin, Ethereum, and various altcoins to minimize concentrated exposure. Position sizing is critical to survival. Adhere to the rule of never risking more than 1 to 2% of your total portfolio on a single trade, which caps potential losses and preserves your capital for ongoing opportunities. Automate your trade exits using stop-loss and take-profit orders. A stop-loss automatically sells your asset if it falls to a set price threshold, halting further losses during adverse market moves. Conversely, a take-profit order triggers an automatic sale when your asset hits your target price, securing profits without requiring you to monitor the markets around the clock. Dollar cost averaging, or DCA, means investing a fixed amount at regular intervals irrespective of price swings, which over time averages your entry cost and mitigates the effects of volatility. Target a strong risk-reward ratio, ideally 1 to 3 or better, so that for every dollar risked, you stand to gain at least $3, making your overall trading edge positive. Hedging offers protection from downturns by holding stablecoins or employing futures contracts to counterbalance losses in your primary spot holdings during turbulent periods. Recall the catastrophic Luna crash that erased billions in value almost instantly? Emotional discipline is vital. Resist impulsive trades fueled by FOMO, fear of missing out, or FUD, fear, uncertainty, and doubt. Commit to your trading plan unwaveringly, ignoring the relentless market noise and hype that tempts poor decisions. True discipline remains your most powerful asset in the crypto arena. Leverage reliable tools for superior risk management, starting with secure hardware wallets that store your keys offline, shielding assets from online hacks and cyber threats. Opt for reputable exchanges boasting robust security protocols, and employ portfolio trackers to vigilantly monitor your holdings and real-time risk exposure across all positions. Implementing these strategies diligently empowers you to traverse the crypto markets with heightened confidence, robustly defending your financial future against inevitable uncertainties. Apply these principles immediately to forge a resilient crypto portfolio capable of enduring volatility. Your sustained financial well-being hinges on proactive risk management today. Once again, this video serves only informational purposes and must not be taken as investment advice. Always prioritize conducting your own comprehensive research prior to any trades.
If you want more crypto updates, market analysis, and breaking news, hit the subscribe button and turn on notifications.